Okay, well, hello. Now we're going to do our business auto. So I'm going to go to the PowerPoints and I'm going to be off video and then I'll join you at the end. So I'm sharing my screen here and we've got our commercial business auto. Now remember, this is supplemental material. So I really want you to go through your workbook and also your test questions and flashcards if you have them. Again, it's all about preparing and repetition there. So you're in the right place. If you've been struggling with that property and casualty pre-licensing exam, you really want that career change. You've even maybe taken a self-study or classroom class somewhere else. So this is a streamlined approach just to give you an overall review of what's really important for that state test. Now, about myself, I've been in the insurance industry for over 30 years, and I've been teaching insurance classes for 27 years. I'm a subject matter expert for Pearson VUE. I've purchased several insurance agencies in addition to owning this insurance school. So the reason why I'm telling you that is so that you know when I use examples, these are real case examples to help you pass the state exam. I'd love for you to follow me on Facebook and LinkedIn as Tammy Delore Insurance Educators. It's all about preparing. It's all about repetition, saying things over and over again to yourself. Like I said, going through the workbook, going through the questions, watching these videos, and that'll give you confidence to pass the state test. So inhale confidence, exhale doubt. If you want something you never had, you have to do something you've never done, right? That's one of my favorite sayings. All right, so let's delve into this commercial auto insurance. Now, when we talked about personal insurance, there were some things over there that we did not want to insure on the personal auto, and that's because we're going to save them over here for commercial or business. You may hear it called business auto insurance. You know, some types of businesses that we did not want to insure for personal auto were like taxis, service vehicles, delivery vehicles. Okay, so now we're going to put those types of things on your business auto policy. Now, your business auto can be written as a monoline or included in that CPP, that commercial package policy, that we're going to build one policy at a time because we did not do the business owner policy. So it's used to ensure the private passenger and commercial auto exposures of all businesses other than garages, truckers, or motor carriers. Those are insured on a different type of form. So a commercial auto policy could be your common policy deck, your common policy conditions, and then you would have your business auto form. Now, when it comes to business auto, there are 10 symbols. So that is something you need to know. And these 10 symbols are what determine coverage. Now, remember in your personal auto is a very broad policy. It not only covered owned vehicles, those vehicles that insured owned, but it also had non-owned coverage. So if you were to borrow a friend's car in the personal auto, you didn't have to call up your company to ask for permission. Hey, will my insurance provide insurance over his car or her car if there's not enough coverages? No, there is a non-owned coverage on an excess basis. So in other words, if you're driving Tom's car and you have a wreck in Tom's car, we know that Tom's insurance is primary. Then if he doesn't have enough or he doesn't have any insurance, then your insurance will be excess over that. So in your personal auto, you not only have owned, you have non-owned, you have that temporary substitute. So if your car is in repair, but in the commercial auto world, you're going to have to use a symbol for those things. And if you don't put the symbol down, then it's not covered. So it is definitely not as broad as your personal auto. Now, one of the major symbols, we're going to go over the top three, is your owned. This is any auto that business were to own. Just like you own autos, what is the business owned? So we're going to put that symbol of owned there. The other is hired. If you have a business where they are leasing and hiring or renting, maybe business trips where they rent vehicles, then you will need to put the hired symbol on there. You didn't have to do that in personal auto. You automatically get coverage for all those things. You did not have to do in personal auto non-owned. Okay, that's when I'm driving Tom's car. But here, if there is a non-owned exposure for the business, you need to make sure you put that symbol down. And what is non-owned? This is autos that are owned by the employees. Okay, these are autos owned by the employees and used in the insurance business. So it's only about liability. So this is where Tom, you send him out on an errand for the business. He's in his own car. He has an at-fault accident. Not only does Tom get sued, but the business gets sued. So of course, Tom's insurance is first because the insurance always follows the auto. And then the business, if they have this non-owned, they got to have this symbol, that extra layer of liability would go over the employee's liability. Okay. So you have your owned, you have your hired, and you have your non-owned. Now, let's use an example here. Business auto policies will cover the insured. Now, who is the insured? So when you're thinking about a business, think about who is going to be driving these vehicles. Well, the corporate officers may be driving, but the main exposure is going to be your employees. The employees are going to be driving these owned vehicles, right? So they're going to be getting MVRs. The company is going to be underwriting the employee. So when we're talking insured, we're probably talking about an employee that is driving the covered autos. So keep in mind, this is the owned autos. So the business has these autos that they owned. The employees are the insured, and they are driving the owned vehicles. Now, what will it not cover if you have the symbol owned on there? Well, it will not cover an employee who drives the employee's own car for business purposes. If you just have the symbol owned cars on there, and your employee is driving their own car, that is non-owned. So you better have that symbol on there. So owned does not cover that. You need the non-owned symbol. It does not cover an employee who drives a bulldozer. Remember, we talked in commercial general liability, we said that commercial general liability does the operation of mobile equipment. All right. So if an employee is driving a mobile equipment and it's an operation, then this owned vehicle is not going to cover that either. Or a service station employee who test drives the insured's auto. That is going to be garage keepers. So owned is when the insured, which is usually an employee, is driving that business's auto. Hired is when that insured, that business goes out and leases, rents, or hires another vehicle. Non-owned is when employees are driving their own vehicles. And then this non-owned liability is an extra protection of liability that goes over the employee's liability once it has been exhausted. So make sure you know those three symbols. Now, the good news is liability is the same as it was in personal auto. It's all about being negligent. It's all about legal liability. It's all about third parties. It's all about causing a third party bodily injury and property damage because of an auto accident. The policy only protects those who are considered insured. Now, remember, most of your insureds are going to be your employees because they are driving the vehicle. So if they're driving that company car and they get sued, they are considered an insured. They have to be legally responsible. The policy will also defend the claim. And we learned all this in our personal auto as well. Defense costs are paid usually in addition to that limit of liability. Now, supplemental payments, remember, this is that extra bank over here. So you have your liability limits, and then you have your supplemental payments. So this is that extra bank. It does not reduce the policy limit. $250 for the cost of bail bonds. It pays for appeal bonds. Post-judgment interest. Now, remember, pre-judgment interest is included as part of the liability limit. Up to $200 per day for loss of earnings if the company requests that, and other reasonable expenses incurred by the insured at the company's request. So keep in mind those supplemental payments are that extra bank that do not reduce the liability limits. They are in addition to your liability limits. Now, some exclusions: intentionally by the insured, damage to property that's owned or being transported by the insured. If that insured has their own property in the truck and they have it, and the employee has that at-fault accident in that company vehicle, the business's property is not going to be covered. They're going to need some type of business floater, like an installation floater or some type of commercial property form. So any property that they have or is in their care, custody, and control is not going to go here. It's all about property damage to a third party. Now, if they hit someone else over here and they damage their property, which is usually their car and anything inside of their car, then of course that would be covered. But the insured, the business's own stuff, is not covered. Now, if an insured, like an employee, gets injured, that is workers' comp. use of the vehicle without permission, any type of nuclear energy liability. Usually 4 wheels or less is not going to be on this policy. Prearranged racing, that type of thing. Remember, any type of handling of property. So the damage caused either before the property begins the loading process or after the property has been finally delivered from a covered auto is general liability and is usually not covered under this business auto form. Any type of movement by property by a mechanical device. Again, this is usually covered under the CGL form, unless it is a hand cart or a mechanical device attached to a covered auto. Now, pollution, war, racing, all of this is excluded. What are your limits of liability? Again, you need to check your state. These are North Carolina limits. Minimum limits are 30, 60, 25. So 30,000 per person for bodily injury, 60,000 for that accident for bodily injury, 25,000 for property damage. So I'm going to show you how that works. And again, be sure to check your state's limits. But let's just say that we have this 30,000, 60,000, 25,000, just as an example here. So let's say that you have an employee, they're driving a company car, they are negligent, and they cause an injury to a third party. So maybe the first person, and I'm just making this up as I go along, has a bodily injury of 10,000 that they hit over here in the other car. The second person has a 35,000 bodily injury, and maybe they damage that other person's car and they do $15,000 worth of property damage on the car. So what happens here with this policy, for one person, it's only going to pay $30,000 for bodily injury. For the whole accident, it's going to be $60,000. So this one person can definitely get $10,000. And then this $35,000, they're going to cap it at $30,000. So even though we have a $60,000 bodily injury bank, they're only going to get $30,000. And then the $15,000 property damage will only be $15,000. So that is how that's going to work there. Now, let's just for example's sake, show you what it would be $5,150, just in bumping up those liability limits a little bit. That $10,000 bodily injury, of course, is going to be paid because we have $50,000 per person. Now, look at this, the $35,000 bodily injury that we couldn't pay the full amount over here. We can pay the full amount here because we have up to $50,000 per person. So bumping up those liability limits really, really help a lot. And then we only have $15,000 in property damage. So we're okay with paying that $15,000 because we have a total of $50,000 here. So this is how your liability limits work. This is bodily injury per person. This is $60,000 bodily injury for the whole accident. And this is $25,000 for property damage. Go back to the screen here. So financial responsibility, what does that mean? That means that most states say that you have to have liability, bodily injury, and property damage. And usually the way you meet this requirement is you purchase an auto policy for those liability limits required by the state's law. So some states have higher limits than this. Some states have lower limits than this. Now, out-of-state coverage, since states are regulated differently. Everybody has different limits, every state. If you were to go in a state, and let's say your state had 25, 50, 25, and you were to go into North Carolina, for example, and that's 30, 60, 25, then your policy would automatically go up to that state's minimum liability limits so that you will be compliant while you're driving in that state. And that is called out-of-state coverage. Now, if you have high limits like 100, 350, it's not going to go lower. It only goes up if that state requires that. Now, physical damage coverage is the same exact physical damage we talked about. The main two are collision and other than collision, which is also referred to as comprehensive. Remember, it doesn't cover anything left as far as personal property or any type of property in a vehicle for that insured. Collision is the impact of an auto covered by the policy with another object. Maybe they hit a tree or they hit a fence, okay, or they hit a building, okay, or they hit a vehicle or the upset of a vehicle. Now, other than collision or comprehensive is a lot of perils here. Missiles are falling objects. So if they hit a tree, that's collision. If a tree falls on their car, that's comprehensive. Okay, so that's a falling object. Fire, theft, earthquake, windstorm, hail, water, flood, vandalism, riot, contact with a bird or an animal, breakage of glass. Now, if breakage of glass is caused by collision, the insured has the option of having it treated as collision to avoid a double deductible. So again, the same perils, the same definition as you had in your personal auto. Now, Medpay, remember, Medpay is all about the occupants in the car. Well, since you have mostly employees that are the insureds driving the company cars, it's not unusual to see a business auto policy not have any Medpay on their cars, because why would they? If they're not having any type of third parties in the car, there's no reason to, because if they get injured, if the employee gets injured, they're going to go workers' comp. The only time you'll really see MedPay on business auto policies is maybe they will have a third party in there. Maybe they're picking up people from the airport or that type of thing. Of course, a taxi is going to have MedPay. So it is not a form of liability coverage for injuries sustained by the passengers in the other car. Remember, it's all about the occupants of the vehicle. But again, if the employees are the only ones driving these cars, it's very, very, very common to not see MedPay. And you basically have those exclusions. And one of the ones I wanted to point out, as you did on liability, is that the exclusion of if an employee is injured. Now, your MedPay is per person, and your typical limits are 1,000, 5,000, or 10,000. But again, not uncommon not to see MedPay on these policies. Now, what is uninsured and underinsured motorists? So uninsured motorist is someone that does not have any insurance. So that person has to go under their uninsured motorist. So maybe I'm driving my company vehicle and someone hits me and they're at fault and they have no insurance. That's uninsured. So the company would have to go under their uninsured motorist. Now, hit and runs. Some states, hit and runs can be an uninsured motorist, whether or not they're identified or not. Other states like North Carolina, the driver has to be identified. And this is tough because if there's a hit and run and the driver is not identified, then it would go under their collision. So it just depends. Some states are, the driver does not have to be identified. Some states it has to be identified. But regardless, all states are when there's no liability coverage, or the insured maybe thought they had liability coverage when they hit them, but their company has gone insolvent or they have denied coverage. Now, underinsured coverage is just what it says there. It pays the difference between the insured's actual damages, and it's for bodily injury. So always remember, underinsured motorist is only for bodily injury. Someone hits you, it's their fault, but they don't have enough insurance. So it's going to pay the difference between the insured's actual damages for bodily injury and the amount of liability insurance carried by the driver who was at fault, up to the limits of the insured's underinsurance motorist coverage. So this is someone that hits you and doesn't have enough insurance. And again, it's only for bodily injury for underinsured. Sometimes you'll see those coverages are totally separate meanings, but sometimes they'll be together as far as how they are presented. Okay, I'm going to come back to you for a second and turn on the video here and go back to our last screen. So we've talked about our commercial auto. Now, remember, what's important here is you're going to think about your symbols, and your main symbols are owned, hired, and non-owned. And there are 10 total symbols. Your definitions of liability, comp, collision, all of that's going to be the same as you learned in your personal auto policy. Now, basically, you're putting the coverages you couldn't put on your personal auto, like your taxis, your services, your delivery vehicles, on this business auto policy. So I hope this helps you pull together what is on the business auto policy, and keep preparing, keep repeating things over and over again so that you'll have confidence to pass this state exam. Here are some cute little mugs I have in a shop, some inspirational mugs if you're wondering what this is here, and it's on this website here. So I will see you guys in the next video.